Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we're going to be taking a detailed look at cable price action from the 14th of July to the 24th of July. The idea behind this video is to show you what professional traders look for in their technical analysis in order to try and determine the future movement of price action. This is a 1-hour chart of cable for the period of the 14th to the 24th of July 2020. One of the biggest mistakes that new traders make is that they do not look at the historic price action before putting on a trade. Technical analysis is a trader's best friend and should be looked at holistically before taking on a trade. Technical charts should be looked at from left to right because they tell a story. We can see that the price action of this pair was bid up to position A, which was a new recent high and importantly above the key figure of 1.2600, a multi-month high for the pair. Traders will have taken some profits after this push, and we can see that price action fell back to the support line before a second push higher to position B. Position B is lower than position A. This tells us that the strong bull move was running out of steam. Buyers were worried about the possible double top rejection of position A, and this left the door open for sellers to come in because price action could not be sustained above the key 1.26 level. When they have a period of sideways consolidation between the support and resistance line, more importantly between the two key levels of 1.25 and 1.26, however, there is a breakout of this consolidation period at position D, where the bulls gain control and where the resistance line becomes support. We see an aggressive move higher from here to position E. Support lines often become resistance levels and vice versa. The other critical components of this bull move was the fact that the EU Brexit negotiator Mr. Barnier was holding talks with a British government regarding the future trading arrangements. Mr. Barnier was holding talks with a British government regarding the future trading arrangements post-Brexit and a potential new trade deal. The market was expecting that a possible deal could be reached, and this was seen as positive for the British pound. Meanwhile, profit-taking was taking place at position E, and where the subsequent price action began to fall back to position F. Technical analysis traders saw a bear formation and pushed the pair down to position G, which was an important round number of 1.2650. Looking for an opportunity to enter the market, bears again took control and pushed the pair higher. However, the fading arc formation was reflective of uncertainty, and where the market was braced for the EU press conference where Michael Barnier, the lead negotiator for the EU-UK trade deal, said that the deal was unlikely with the British government due to substantial differences and so-called red lines around fishing rights and possible divergences in standards. These would likely prevent a deal being reached. This was seen by the markets as bad for the British pound and then activated an initial sell-off in the pair, which was only stopped in its tracks when the United States released worse than expected initial jobless claims data for June. This reversed the pair at position H. Coupled with the fact that Mr. Barnier said that there was still an opportunity to secure a deal with the British government and the talks would resume again in August. This gave a more positive sentiment to the pound, and the pair lifted to the second period of support and resistance. Importantly, this was above the key 1.27 level. In thin trading on Friday evening, BST, after the European and London sessions had finished and the China and the US tensions rising because of a breakdown in relations and a lack of trust growing on either side, the US dollar was generally sold off across the board, and cable lifted to a new multi-month high of 1.2800. A large part of the bid tone in this pair was because of a bad sentiment for the United States economy due to the growing number of COVID cases, which is seen as being almost out of control, and where Great Britain has largely surpassed the worst of the disease and whereby the economy is opening up and things are returning to some kind of normal. The scope is further to the upside in this pair due to the ever-increasing bad sentiment for the United States dollar and slightly better sentiment for the British pound, where there still is hope that the European-UK trade deal can be completed by December. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.